Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, November 17, 2023. U.S. Treasuries climbed Thursday after the latest economic figures highlighted a gradual economic slowdown, reinforcing expectations the Federal Reserve will conclude its aggressive interest rate hike campaign. The 10-year Treasury yield fell 8 basis points to 4.45%. Following a strong rally that brought stocks near overbought territory, the S&P 500 lost momentum on Thursday. With the earnings season winding down, traders remained focused on major retailers. Walmart stock fell amid a cautious outlook on consumer spending, while Macy's climbed on a profit beat. Cisco Systems sank following a bearish forecast. Wall Street closely monitored the newest economic data. Continuing unemployment claims increased to nearly a 2-year high, while factory production declined more than expected, largely due to strike-related pullbacks at automakers. Additionally, home builder sentiment hit its lowest level this year. According to Jamie Cox of Harris Financial Group, the lags in monetary policy are catching up with the economy now, from input costs to industrial production to labor. The fight now shifts from inflation to preserving economic growth and averting recession. Rate cuts are closer than people think. Fed Governor Lisa Cook noted she is attentive to the risk of an unnecessarily sharp economic slump, citing strain in some sectors from tighter financial conditions. Cleveland Fed President Loretta Mester told CNBC she hasn't decided if another hike is still required, adding officials have time to observe economic developments. While it remains premature for the Fed to declare victory over inflation, economic figures like these will likely temper lingering worries about an additional rate hike, according to Chris Larkin of E-Trade from Morgan Stanley. After rallying from oversold levels on bets of no more Fed hikes, equities paused on Thursday. The S&P 500 remains on pace for its best month in over a year, up roughly 15% in November. However, Goldman Sachs thinks investor wariness will continue into 2024, with attractive cash returns presenting stiff competition. According to James Demert of Main Street Research, further short covering, along with institutional and retail investors being underweight stocks, will likely continue driving the market higher into year-end. In commodities, West Texas Intermediate crude extended its decline after slipping below its 200-day moving average. A report Wednesday showed U.S. oil stockpiles at their highest since August. The global copper market is signaling shaky prospects next year, with a closely watched pricing pattern widening further to indicate ample prompt supply. Cash metal traded at a $100 per ton discount to the 3-month LME contract Wednesday, the widest gap since the 1990s. The contango structure points to more than enough metal to meet immediate demand. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Thursday's uninspiring U.S. data releases made it difficult for the U.S. dollar to build on Wednesday's recovery gains. The U.S. Department of Labor reported initial jobless claims increased by 13,000 to 231,000 in the week ending November 11. Additionally, the Federal Reserve's monthly report revealed industrial production contracted 0.6% in October after 0.1% growth in September. Meanwhile, Wall Street's major indexes closed virtually unchanged on the day, while the benchmark 10-year U.S. Treasury bond yield declined toward 4.4%. U.S. dollar performance this week. The U.S. dollar was the weakest against the Australian dollar this week, declining 1.77%. The dollar fell 1.44% against the euro, 1.28% versus the British pound, 1.08% against the Japanese yen, and 1.27% compared to the New Zealand dollar. The US dollar dropped 1.53% against the Swiss franc and 0.36% relative to the Canadian dollar. On the crosses, the euro gained 1.42% on the dollar while dropping 0.06% against the Swiss franc. The British pound rose 1.26% against the US dollar but fell 0.25% versus the franc. The Australian dollar climbed 1.74% on the greenback yet declined 0.23% against the franc. Euro to US dollar consolidated around 1.0850 on Friday following a flat close on Thursday. Pound sterling to US dollar fluctuated in a tight range near 1.2400 on Thursday before edging lower on Friday, recently down 0.23% at 1.2385. US dollar to Japanese yen turned south on Thursday, closing below 151.00. The pair continued pushing lower during the Asian session, approaching 150.00. Earlier today, Bank of Japan Governor Kazuo Ueda said the central bank does not yet have a specific plan for selling ETFs. He added a weaker yen increases domestic inflation via higher import costs, stating I cannot say decisively that a weak JPY is negative for Japan's economy. Gold benefited from the retreating U.S. Treasury yields on Thursday, climbing above $1,980. Gold ounce per US dollar is preserving its bullish momentum in early Friday trading, advancing toward $1,990. Key events this week. U.S. housing starts, Friday. U.S. Congress faces a midnight deadline to pass a federal spending measure, Friday. ECB President Christine Lagarde speaks, Friday. Chicago Fed President Alston Goolsbee, Boston Fed President Susan Collins, and San Francisco Fed President Mary Daly speak, Friday. Some of the main moves in markets. Stocks. The S&P 500 fell 0.1% as of 2:14 p.m. New York time. The Nasdaq 100 fell 0.1%. The Dow Jones Industrial Average fell 0.4%. The MSCI World Index fell 0.3%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0854. The British pound was little changed at $1.2417. The Japanese yen rose 0.5% to 150.57 per dollar. Cryptocurrencies. Bitcoin fell 4.4% to $36,005. Ether fell 3.9% to $1,966.48. Bonds. The yield on 10-year treasuries declined 8 basis points to 4.45%. Germany's 10-year yield declined 5 basis points to 2.59%. Britain's 10-year yield declined 8 basis points to 4.15%. Commodities. West Texas Intermediate crude fell 5% to $72.81 a barrel. Spot gold rose 1.2% to $1,983.14 an ounce. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.